Hello, and thank you for joining us for this brief webinar to help educate you on the new IRS guidance regarding the employer retention credit. Now, this is a refundable credit that can give you up to $5,000 per employee. But some things recently changed. Likely you ignored this credit last year because you got the PPP. And let's take ourselves back to almost a year ago. Put on those glasses that help us give us that 2020 vision. This time last year, it was full of uncertainty. And the government was mandating shutdowns to prevent the spread of COVID-19. I was working with many clients to help decide of all of these provisions of the CARES Act, which ones would be the best for your business. And unilaterally, we all decided to do the PPP loan. And that's because that gave you the most money that you could get. It was promised to be forgiven if you used it to pay for wages and rent and utilities. And these other credits, the employer retention credit, was largely ignored because it just didn't give you as much of a benefit. At that time, we were scrambling to, learn new standards of PPE, protocols for how to keep safe in this time of a pandemic. And so there was just a lot of crazy things. Some people got large PPP loans, some people didn't get quite as much as they expected, but for the most part, eventually small business owners were able to obtain a PPP loan. And maybe at the end of 2020 or even now, they're working to get those loans forgiven. Well, last week, the IRS issued guidance called the Notice 2021-48 regarding the employer retention credit. And here's the good news, is effective after they issued the Taxpayer Certainty and Disaster Tax Relief Act of 2020, you can now get both the PPP and the ERC. And we can retroactively go back and claim that credit against wages that were paid in 2020. Don't you love that name, Taxpayer Certainty and Disaster Tax Relief Act? It's an oxymoron if I've ever heard one. So in order to claim the credit, you have to have a few stipulations. First of all, you have to have paid wages. Your revenues have to have been down by more than 50%, or you could have had a partial shutdown during 2020. So let's go over the original rules, what we were dealing with last year at this time, and then now the effective rules that bring in a much wider group of people that can benefit from the ERC. Last year, of course, it was either the PPP or the ERC. And the only way you could qualify for the ERC was to be down by 50% in revenues as compared to the prior year. This year, under the new ERC rules, you can get both. You can get the PPP loan forgiveness and the ERC. You just can't use the same wages to qualify for loan forgiveness and the ERC credit. So we have to be very careful about how we allocate wages between the two in order to get the maximum credit. But you can qualify for the ERC if you were mandated by a government authority to shut down fully or partially in 2020. The credit is on wages paid from March 9th until December 31st, 2020, and then additionally, with different provisions, was extended for the first 2 quarters of 2021. In 2021, the credit is up to 70% of wages, and in 2020, it's 50% of eligible wages that were paid. So you may be asking, what does it mean to qualify that you had a full or partial suspension of business operations? Well, the IRS frequently asked questions included in that notice answer that question. So the answer is a business may be considered to have a partial suspension of its operations if the government order restricted the operations of non-essential services. So if you were open for emergency services that were essential, but you couldn't do non-essential services such as exams and cleanings, then that you qualify. So that gives you the status of being partially shut down. Okay, so now we've determined that you qualify and you want to go for it and try to get the maximum credit. How do you compute that? Well, first of all, you have to look back and say, what were the dates that you were mandated to be shut down? So in this example, March 19th was the last day of regular work, and everything was back to pretty much normal by May 4th. So I took those 4 pay periods during that time when it was mandated to be shut down, and you can count gross wages and group health insurance that were paid to employees during that time. Now, they may have been working partially, they may have been only coming in to do office work, or you may have been paying them to not work. And all of those things qualify as long as you paid wages during those times. So if you did pay wages or you paid health insurance, those are your qualifying numbers. So in this example, we took the very first pay period, March 9th to March 22nd. There was times during that pay period that this office was open and times that was closed. So we had to prorate that payroll. So you can see at the bottom, the wages that qualify for that pay period were $1,580 and 120 of health insurance. And then we go through each pay period, but basically when you figure out the total wages and the total health insurance, you can take 50% of those to get to the amount of the credit. Let me move my picture up here so you can see that in this example, the credit is $10,525. So it's definitely not as much as the PPP, but it's something and it's worth pursuing. So how do you go about retroactively getting this credit when you've already filed all of your payroll reports for 2020? Well, you file a Form 941X to get the credit, and it's a 4-page form that you go through, and you can add in some lines specific to the employer retention credit, wages that were eligible, and the amount of the credit, and then you'll get a refund from the IRS on these amounts. So I wanted to give you the highlight of that. Make sure you understand that you likely qualify for this. It's a very easy thing to obtain. File that form and send it into the IRS. And we would love to help you if you have any specific questions regarding this. My name is Shauna Zobrist. I am with Apex Virtual Accounting. Nicole and I are on hand and available if you have any questions. Our business is related to helping you with your technology, keeping financial records so that you can be able to, we learned last year how important it is to have really good financials so you can apply for these loans and these programs as quickly as possible. Round 2 of the PPP has been no exception. We've had to help people make sure their books are up to date. We use technology. We love relationships with our clients so that we can make sure and keep you informed on all of the latest tax benefits and things that are coming down the pipeline with the way our world is constantly changing. So if you have any questions, please reach out to me. Thank you so much for taking a minute to watch this video, and I hope you have a great day.